Home values have fallen in half of the country, and here's what markets are seeing a downward trend. We'll have more right after this short message.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome to the Industry Leader Update. I'm your host, Shannon Hicks. Today, we're going to take a closer look at an evolving trend that's beginning to ripple across the housing market, and it's one that could have real implications for homeowners that are seeking to get a reverse mortgage. According to recent analysis, which was highlighted in Newsweek, home values have declined in nearly half of all U.S. zip codes over the past year. That's right, 48% of zip codes saw home price reductions between May 2023 and May 2024. Now, sure, they're not 10% drops in each state, but they do indicate a widespread softening of home prices. Now, before we ring any alarm bells, let's put this into perspective. The housing market has been under immense pressure for the past few years between surging interest rates and limited inventory and then affordability constraints. And it's no surprise that some regions are beginning to see a bit of a correction in prices. And home sellers, they still haven't embraced the reality that you can't sell a home at 2022 prices with 2025 interest rates. The math simply doesn't add up, and home buyers, they know this. We're seeing signs of a broader shift in the U.S. housing market, noted Nick Gurley, founder and CEO of the real estate analytics platform Reventure, in a post on X. Inventory is climbing in many regions, and sellers are beginning to recognize that prices may be overinflated, prompting more price reductions. So where are these price drops happening? Some of the sharpest declines are showing up in pandemic-era boomtowns. Places such as Austin, Texas, and Boise, Idaho, where prices skyrocketed during the COVID-19 pandemic. For example, the Austin Round Rock metro saw home prices drop by more than 11% in 1 year, and similar trends were observed in Salt Lake City and parts of California. Another trend to closely watch for are distressed sales. Now, these are not foreclosures, but rather homeowners who are now ready to hit the eject button because they need to sell a home that they can no longer afford. And one sign of distressed home sales that you can look for is this: stronger than expected home sale activity or volume coupled with a significant increase in price cuts. Now, that may be due in part to mortgage delinquencies, which have been increasing since 2023, and a 29% year-over-year jump in foreclosure starts, as reported in December by Black Knight. But let's zoom in on what this means for us, for you as a reverse mortgage professional. This isn't just a headline, obviously, but it is a chance to prepare and adjust your approach. So, as you know, home values are central and pivotal to our work, especially when helping clients that want to tap into their home equity. Now, if a homeowner's equity position is shrinking, that's going to affect their eligibility or loan proceeds. But on the flip side, some older homeowners may feel a renewed sense of urgency to act now before home values drop. Now, as I've said on this show repeatedly, equity is just a number on paper until it's been separated from the home. And one question you may be able to pose to a homeowner is this: do you believe that you'll see interest rates drop significantly in the near future while home prices begin to accelerate? It's also important to note that not all markets are seeing declines. In fact, many areas, especially in the Northeast and the Midwest, are still posting modest gains. And that reinforces the truth that real estate is local and blanket assumptions do not serve our clients. Now, is a massive housing crash likely? Most likely not, but what we may see is much of the hot air slowly begin to seep out of the balloon that is the overinflated housing market. So here's your takeaway for the week. Stay proactive, and if you're working with homeowners in markets that saw big gains during the COVID pandemic, it may be time to revisit that conversation in those areas around the current home equity position. Is it safe? and they may want to act while there's still strength in numbers. And as always, we want to be leading with education and helping them understand what these trends mean for them, not just what they're seeing in the headlines. Okay, so your turn. What are your thoughts? Leave those in the comment section below. And if you'd be so kind as to share this week's video on LinkedIn, thank you very much. We do have a YouTube channel. If you have not seen it yet, please consider subscribing. That way you never miss any of our latest content. And each and every week, we curate the most interesting and relevant reverse mortgage news in our weekly podcast, HECM World Weekly. We have both an audio and video edition. Listeners can listen and subscribe on Apple Music and Spotify. Thanks again for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis you'll only find right here. Be sure to come back. We look forward to seeing you again. Have a great week.